after initially rising on Fed Chair Jerome Powell's comments testimony before Congress. For more on what Powell said, day 2 of Disney Plus in service, and the market outlook, let's go out to Santa Monica, California. We're joined by Ross Gerber, CEO of Gerber Kawasaki. So Ross, all of a sudden the sentiment seems to have turned on the street this afternoon. What happened?
Well, I think phase 1 of the trade deal done. I think it's mostly just posturing. But if you go back to January 2018, when the trade war started, the market really hadn't gone anywhere. And then we just recently broke through 3,000 and moved to 3,100 on basically hopes that the trade war was being resolved. So it's clear that the markets and the economies of the world want resolution, want tariffs removed. And so any hint that this deal might not get done is going to put pressure on stocks. There's no question.
And going on to Powell's testimony, the Fed chair said that the economy is in good shape, but that the Fed was open to reassessing its stance. So what does this mean in terms of a possible interest rate cut by year? And is that off the table? Why did investors like what he had to say?
Well, I think that, if you go back a year, Powell was sort of a hawk, aggressively raising interest rates as the economy was softening and really caused, quite a market decline. So a year later, to see interest rates now down at 1.5% and the Fed being accommodative to being very, sensitive to the economy and the markets, that's real positive, because the one thing that does protect us, and the one reason why the markets have held up, is because the Fed has been our friend this year, and that's really what's given us the rally that we've seen in stocks today. So as the Fed continues to be accommodative, it's a great support for stocks.
So as you say, with the Fed as the market's friend, the earnings season practically over now. What's your market outlook as we go towards year end?
Well, it's all based around trade resolution. I think there's nothing more important for global growth than trade resolution between the U.S. and China. We both need each other. I was in the mall the other day shopping, and there was a Chinese couple from China shopping, and they had bags from every major U.S. retailer on their arms, having the best time of their lives. And I was just thinking how important the Chinese consumer is to U.S. brands and companies like Tesla and Disney, for example, who have huge, potential businesses in China, as well as Apple and many, many others. And then I was thinking, from the perspective of us getting access to those markets, I think, it's a huge positive. But just the same, we need Chinese goods, and it's also what keeps our prices low. So resolution is just a win-win for both countries. And China really needs this even more than the U.S. So we're really hoping to see this get resolved, and that's what the market wants. And the markets will go much higher if this gets resolved. And if it doesn't, I think we're just stuck in a trading range until it does, and either Trump is going to lose the election or be removed. So this is kind of a crucial election issue for Trump. So I see resolution happening.
All right, Ross, and lastly, since you mentioned Disney, it's day 2 of Disney Plus. You're tweeting away last night about, hey, don't worry about the glitch. And sure enough, 10 million people signed up. So the stock is up another 5%. It's trading at 21 times earnings, and the stock's up 33% year to date. Is it too late to get into the stock?
Well, it's moved a big move today, but absolutely not. This is just the first day of Disney Plus. Now, if they do 10 million in a day, which I don't think has ever been done for any streaming service that's paid, this is amazing. Where are they going to be at the end of the week? So, I think Disney gets to 50 million people pretty quickly. I think this is a profitable business. It's just such a win-win for Disney shareholders, Disney consumers. The product's great. I've been using it the last, since it went live, and my kids love it. They're watching all these old Disney movies. So Disney is a strong buy at my firm, even at these prices, where our price target's 175 to 200 for Disney on the short term. I've owned Disney my whole life, so I think it should be in many investors' portfolios, if not all. Of course, there's always risks involved with investing, but Disney seems like one of the better bets that an investor could make right now.
Okay, long-term hold in your view. Thanks a lot, Ross. Appreciate it.
Thank you.
Our thanks to Ross Gerber of Gerber Kawasaki, coming to us from his office in Santa Monica, California. I'm Fred Kantayama. This is Reuters.